Welcome to today to another webinar here with Affinity Management. I have the great pleasure of having two of real close friends of mine, Daniel Rojas with LLJ Risk Advisors and Matt with Global Pro. We're here to talk on a very important topic that's I'm sure been top of mind to, I know, many of the associations that we manage, as well as other associations and managers that we're in contact with. It's a continuous conversation. Obviously, many residents, board members, partners have all experienced it. Whether you're in association or not, you've seen increases one way or another within your coverage. So today we're going to talk about specifically about associations, what you can do to protect it from an insurance perspective. So we'll be touching on those topics. We had a significant amount of residents who signed up, or I should say board members and CAMs. But before we get started with today's webinar, I want to give everyone an opportunity to log in, and why don't we start with also some introductions. So I'll start with the bottom of my screen here. Matt, if you want to say a little something about yourself and the firm you represent.
Sure. Thank you very much, Rafael. Obviously, thank you to Danny. This is great. I love doing these things with you guys, and I appreciate the time today and the opportunity. I'm Matthew Sangster, and for those that don't know, I'm the president of Global Pro Florida. We are an insurance services firm, We like to call ourselves insurance coverage experts. And what we do is typically we represent whether it's before, during, or after any loss or damage. And our clients typically are community associations. And I think that our team, our process, everything we've built over the past 12 years is builds and has culminated in the fact that we are uniquely qualified to handle community association needs. Again, whether it's placing insurance, whether it's representing, the association when there's loss or damage, or even just consulting on the various things that are going on, stuff that we're going to talk about today in depth, obviously. And again, thank you for the opportunity. I look forward to it. If anybody has any questions, please, send them in the chat, follow up later. Happy to help anyone on the call.
Thank you, Matt. Always a pleasure to have you on. Next up, I have Daniel.
Hi, everybody. My name is Daniel Rojas from LLJ Risk Advisors, and we are an independent insurance firm here in South Florida, specifically Miami. We handle pretty much a lot of condo business all over Florida and across the U.S. What we do is we help market the insurance for associations with the proper coverage with the insurance companies we represent. And since we're independent, we have pretty much multiple accesses to different carriers. I myself have over 20 years insuring condos and condominiums in South Florida. So very familiar with the marketplace and what's going on right now. And also for me, it's a little bit of deja vu because this tough market has happened before, right when I first started about 20 years ago. So I'm here for you. Any questions you have on coverages, on the marketing of the insurance and what's going on in the marketplace, I'm here for you guys.
Excellent. Thank you, Danny. It was a pleasure to finally have you on. I know we've been wanting to do this for some time, so great to finally have you on one of our webinars. As for myself, my name is Rafael Aquino. I'm the CEO and co-founder of Affinity Management Services. We're a community association management company. Our proven process is align, execute, deliver, really helping our community association leaders execute their vision. Many times board members find themselves in this, well, why can't we get these things done? And you're just not running your association like a business by having a vision of what you want to get to. But enough about us. I think we're here more about the insurance and what we can do to protect. So I wanted to start off with a quick poll that I launched here, and I'll share the results. We have approximately about 49% of our participants today are board members and 31% CAMs. And what the most interesting number is really the impact that the insurance have had on many of these associations. We're seeing on average between the higher numbers are showing that most associations have experienced between 25 to 50, or if not 50 to 75% increase in their insurance. So I know it's been a big impact for us here, especially managing condos and HOAs, because both have seen increases. So, Matt, I think it would be great to start. I know we're here on insurance, but it's right around the corner. Hurricane season, we're just about a month away from it kicking off. We have the impacts of El Niño and El Niño. So I know you're an expert. I know you and your team are on it. You're always on it with regards to what's expected so that you could prepare your associations accordingly. So what's the forecast that you're hearing right now at the moment with the current hurricane season?
Yeah, thank you. Yeah, so it's going to be another very, very active season, just point blank, extremely active. I think there's a huge difference this year, however, and we'll get into that in a second here. To give everyone kind of a little bit of background, there's several forecasts that come out around this time. They start trickling in end of March, usually early April, depending on the year. Obviously, this year's a leap year, so things are a little bit longer here and there. But the forecasts have been really coming out the past couple of weeks, culminating in what I think is the premier forecast, which is the Colorado State University forecast. Everyone kind of waits for that one to come out.
Yep.
But with that being said, it backs up everything that's forecasted by AccuWeather and some of the other folks that come out with their forecasts earlier. Again, extremely active. You discussed the change in weather pattern here, and without getting on, I'm not a meteorologist. I play one sometimes on TV, but there is a distinct change here. El Nino has been the forecast for the past couple of years, and basically what that is we have this cold air that comes off the Pacific that comes across to the East Coast, which creates what's called wind shear. Okay, and so wind shear is the mitigating factor to all the convection that occurs on the Atlantic side. The Atlantic Ocean this year is very, very hot, as it has been for the past 3 or 4 years now. We're in this situation where even, and Rafael, you fish a lot, and Danny, I'm sure you've been on the water. Even today, if you go out on the ocean over here, especially down the Caribbean or even in the Gulf or on the Atlantic side, the water's upper 80s, almost 90 degrees wherever you go. That's pretty hot. In 2 months, it's gonna be even hotter. So what you're seeing is the perfect storm, for lack of a better pun here, the perfect storm boiling here, where convection is set up to occur, and then you don't have the wind shear coming from El Nino from the Pacific side, which typically helps dissipate some of that convection, some of that hot air. So this year, again, very, very active. The named storms, the number of named storms on average is about 14. This year, we're going to have 23 to 25, so almost double. The number of days where there is potential for a named storm is double the average. And these averages go back decades, right? So this year, it's about 115, 117 potential days where there might be a named storm. The average is about 65, 67, around there. The number of hurricane days is almost double as well. So on average, you have about 27 days, almost a month in the storm season, a couple of months where you might get a hurricane. This year, there's going to be about 45 days where a potential major hurricane, could happen. They're predicting that there's going to be about 5 major hurricanes. With all of that being said, major is usually about Cat 4 to Cat 5. So, to give everyone kind of an example, I think this was one of the first times, at least in the past decade, that I can remember, where in November of 2023, November 15th to be exact, we had an unnamed storm come through South Florida. It was not on the forecast. It came out of nowhere. Unfortunately, we got a lot of business out of it, which is good for us. But unfortunately, there was a lot of calls after it. That storm was almost a Cat 1. We had tropical storm force winds that came out of nowhere, 70, 75 miles per hour, which is right on the cusp of Cat 1, and it caused a lot of damage. So my point is that's not in the middle of storm season. That's not in the forecast, and the weather pattern is already setting up to be very, very active on top of that. So it's coming this year. I think the next couple of months, when we start doing our road shows, which we typically do around this time to get ready and get our associations and our business owners, the developers, GCs, and builders that we work with and represent, we got to get their sites ready. We got to get these associations ready. It's going to be a lot of talk. But to wrap all that up, that was a lot of info, a lot of data. We're going to have about 23 to 25 potential named storms this year. 5 of them might end up being major hurricanes, so about 20% of them. And the number of days that potentially this could happen is about double. It's about 45 days or so this year in storm season. So that's not a rosy picture for Danny, but I'm sure Danny's been preparing his associations and his clients for that. Danny, you can back me up here, but I've been telling everyone, and not only because it's my birthday, but most people have renewals. Most associations have renewals. Most residents have renewals by May 31st down here in South Florida. And I don't think that's by coincidence. Obviously, it's the day before storm season. And so again, I'll throw that to you, but the next couple of weeks, 6 weeks, are going to be very, very active for your business, obviously, and for renewals and everything. and then obviously getting our clients, Affinity's clients, getting your clients, getting our clients ready for storm season. So throwing it back to you now after that bleak news for you guys.
Oh, yeah. Hey, March, April, May are usually the busiest months for us, for sure.
Yeah.
Yeah, I'm sure. So no, and it's important to, obviously we're on an insurance webinar here, but I do find it very important for us to bring the topic up. I know we talk about it to our managers every year. We've been very fortunate over the past couple of years. Obviously, the West Coast has taken their beatings, parts of the East Coast, the Panhandle, and definitely not trying to fearmonger here. But the reality is that it needs to be said that preparation is a must, and it's been a significant amount of years that we haven't really been hit hard. So it's important. The Q&A is open for the participants, so feel free to put your questions in there, and we'll be addressing those questions, assuming they're on today's topic. So Danny, I want to throw it back at you now with regards to the insurance market. As you saw, many residents, board members, or managers have seen increases above north of 50%. So what's your take on the current market? What are you seeing? Are you seeing any kind of relief? I know there was a recent article, I believe this past week, that spoke a bit about relief. It dealt more with homeowners rather than resident policies, rather than commercial policies. But maybe if you can give us a 30,000 foot of what's going on with the market.
Sure. Yes, those three companies that are filing for rate decreases were companies that really deal with the homeowner market, maybe some of the HO6 policies you would find in condo for unit owners. But really what changed in the marketplace was Irma, right? Because the market was already getting tight, and I believe, well, not Irma, it was actually Ian in 2022. It was already getting tight, and when that storm hit, about 50% of the insurance companies that we deal with that insure property in Florida kind of halted and stopped. And that's why in 2023, you saw the largest increases for associations when it comes to property insurance. And that really affected the market. And as far as reinsurance goes, there was not enough reinsurance that year. In January 2023 is when most companies negotiate the reinsurance that they buy for catastrophic storms. And that really affected the market because there was a lot of companies that couldn't even buy enough reinsurance. So that further tightened the marketplace of where you could find coverage and the rates. And that's why everybody saw really, really big increases in 2023. The good news is 2024 in January, the reinsurance was more readily available. A lot of companies were able to replenish the reinsurance. Obviously, the rates were still up there, still high. But just in the last quarter that we just passed, we have actually seen some rate decreases for some condo associations, but really only the new ones within 10 years of being built, maybe 15 years being built, or some of them that have been really drastically updated, when brand new roofs, electrical, plumbing work, all that has really gone into the information that the underwriters are looking for. If you have an older condo that hasn't really updated the building much, it's going to be still really tough. So when it comes to renewals, but we are not seeing the 100% increases that we saw last year. Even if you're an older condo, we have been seeing, 20, 30% increases. I haven't really seen anything more than that this year, compared to last year where we were seeing 50, 100% increases. So I see there is some light at the end of the tunnel, but again, one storm can change all that. And that's the scary part right now, that with the forecast that we're seeing, just one hit can really change the whole market again. But I think the laws that have been passed in Tallahassee, I think have helped, definitely with tort law as well and the liability side. So we'll see. But I do see a little bit of change, which I have not seen in the last year and a half or two, of some decreases on newer structures.
Yeah, it's good to hear that there's some kind of relief, because as many condo associations, maybe not the newer ones as much, but definitely the older ones, or the ones that residents decided to vote down the reserves. This is a big year. This is a big year coming into these condo associations. You're dealing with the BDA laws. You're dealing with elevator modernization issues, or phase 1, phase 2. You're dealing with milestones. You're dealing now with structural integrity reserves. So it's been a very challenging year for community association managers. So it's good to hear that there's some relief. Hopefully, the relief is coming for the older buildings, so those are the ones who have been really impacted when it comes to all the other legislation that was passed and the updates that need to happen. But ultimately, it's still a very tough market, very, very tough market. So, Matt, I know you guys deal with claims and so forth, but working with you guys, I know that you have a pulse on the market as well. What are you seeing from the insurance side and for renewals moving forward and beyond? You're on mute, Matt.
Oh, sorry about that. There we go. So I think it's hard, and Danny would agree with this. I think it's hard to compare apples to apples, renewals today and policies the past 2-3. I mean, it's so different every year, especially with all the legislative changes, the special sessions that were called, all the things that happened really in the past 3 or 4 years. I think the one thing that and again, you're right. I don't want to fear monger, but this is math. It's simple math, and I think the one thing that I'm worried about most for our insureds is a premium increase. That the increase we've seen over the past couple of years is one thing, right? To hear that maybe we get some relief and we don't have, the size of increase this year is great, but I don't want associations and especially boards that are responsible to make decisions as fiduciaries for these associations. I don't want them to lose sight of the fact that just because the premium didn't increase as much as the past 3 years or didn't go up at all, or it's flat or whatever, maybe it went down a little bit, doesn't tell you the underlying coverages and the sublimits and the endorsements and the exclusions. It doesn't tell you the actual product, I should say, that you're getting. And what I mean is, this is the first time, and again, in my understanding of the markets, where we have a situation where, again, active storm season, we're coming off of Irma and then Ian. So that's the past decade. That's the setup, right? And then this hard insurance market, which is driven a lot by inflation. People forget the values of these buildings and these homes are up, tremendously. And especially in Florida, they passed a law that says that they have to insure up to the appraised value. I mean, we'll get into that whole discussion another time. But that's all a recipe for, in my opinion, a perfect storm again, right? This year is the first time that I know where most associations have at minimum a 5% hurricane deductible of TIV, of the total insurable value of their building, which a law in Florida says today that they have to insure up to the appraised value today, right? So think about that. At minimum, if you have $100 million building, which is the associations that we typically represent here, all of us, right? That's $5 million. So after the recertification process, after the milestones, after the BDAs, after all the CERS, after getting compliance and figuring all that out, is there another $5 million laying around that the association has reserved for a potential hurricane this year? Probably not, right? So that's at minimum. Many of the associations that we represent have 10% hurricane deductibles. So yeah, your premium maybe didn't go up another 50%, maybe didn't go up again, maybe it was slightly less, except again, right? If you have a $100 million building, do you have 10%? Do you have $10 million laying around in reserve for potential hurricane? That's your participation as an association, as an insured. It's a difficult time, right? And I think that's what I'm worried about most, right? You're supposed to insure these buildings, but you can't self-insure according to the 718 statute. But that's what we've done here. The laws, the legislation has created that environment, unfortunately. So.
Yeah, those are great points that you bring up. I mean, the inflation point is huge. I mean, we've seen some of our associations go from a value of 30 million to 60 million, and that's what's impacting. Obviously, the rates are the rates. I'll let Danny talk about that. But to get fully insured, and I just launched a poll here to see how many of our listeners actually know what their deductibles are, because if you don't, you definitely want to make sure that you do, which about 40% of our participants don't know their deductible, and 40% don't have a line of credit. So it's very important that if you're finding yourself where you had to take that 5% or that 10%, that you have the strategy or the communication to the residents of letting them know what to expect. Because again, it's so many things layered on top of things, especially in these condo associations where, if the unfortunate circumstance comes that you get hit by a hurricane and your deductible is $3 million, you don't have the reserves for it. You're going to find yourself in a very difficult situation, whether if you're a board member or a manager or a resident, because in many cases, at least in our experience, many residents don't have HO6 policies. So they don't have the policies to be able to provide some kind of special assessment support when it's needed. So it's important that if you're a manager or you're a board member, that you understand what it is and what decisions you're making so that you're communicating that to your residents so that they're well prepared. If your deductibles $3 million, $10 million because you had no choice but to take a 10%, then just communicate that to your residents. Send a letter. Look, we're coming upon hurricane season. If we're hit and we need to fully cover that deductible, this is what the cost is looking like. Hopefully, they're contacting you guys as well at Global Pro to be able to assist them, because then that's a whole nother argument that we can talk about what normally happens in these claims.
Yeah.
But yeah, you bring up some excellent points there. Now, Danny, I want to bring you back into the conversation because I know we've seen it. I know Matt brought it up with regards to exclusions. I think we're in unprecedented time as well with seeing exclusions in these policies. So talk to me a little bit about what you're seeing. And more importantly, I think it's important for our listeners to understand of what are the benefits of having a good agent, because technically an agent, is really a customer service, the way I see it, because many of them are going to the same markets. So if you could touch up a little bit about that.
Sure. As far as the exclusions go, there's really, that's what you're getting. A lot of times you're getting a higher price nowadays with more exclusions, unfortunately, with these insurance carriers. But one of the ones that we've been seeing a lot is on the liability side is assault and battery exclusions. For some reason or another, apartment buildings and condo associations, homeowner associations, what the insurance companies do is that they look at your zip code and they check your crime score. And depending on your crime score, there's high crime in the area. You might be in a beautiful association, but just in the same zip code on the other side of the zip code area, you might have a high crime area. We are seeing assault and battery exclusions left and right. What this means is that if anybody in the premises is assaulted, whether it be a fight, somebody gets stabbed, somebody gets shot, you as an association, if you're brought into the suit, which usually that's what happens, you will not have any defense coverage or any coverage at all to defend the association. So what we're doing on our side is when we see that exclusion, and I've had so many board members and associations that had no idea they had this exclusion on there. What we're doing is we're presenting, if we could find it, first of all, the assault and battery coverage. If not, we're presenting a sublimit. So a lot of companies will give you $100,000, $300,000, $500,000 limit instead of the $1 million that you usually buy for assault and battery that's included in the general liability, just to have some sort of protection. Yes, it's a little bit more premium, but the difference is not in the liability is not huge. You will get a lot of companies that will just send it out there to see if it sticks, and it's the agent's job, obviously, to make sure that they look for that. On the other side, on the property side, again, the deductibles, last year were all 10%. Mostly in Miami-Dade County, in Tri-County area as well. We are seeing some going back to 5%, but really a lot of the actual cash value on the roofs, ACV on the roofs is big right now. Almost every property policy is going to have some sort of limitation or endorsement on the roof. So instead of, let's say you have a 5-year-old roof and you have this endorsement on there, it might not be as bad as having a 10, 15-year-old roof, because what that does, instead of paying you on a replacement cost basis for a brand new roof at today's rates, they're going to depreciate the roof value depending on the age of the roof. And there's a very complicated formula that goes into how to get the ACV value, and maybe Matt can talk more about that. But this is something that we're seeing it on homeowners, but also on condo buildings as well now.
So Matt, I know you're constantly seeing exclusions, especially when you're brought in to help handle these claims. Talk to me a little bit about what you're seeing, and if there's anything that your firm is doing to advise, associations on what they need to do.
So there's a lot. I mean, Danny just touched the story. He knows there's way more. We can get in the weeds. We can talk for hours about all the things that are going on in these policies. But to kind of piggyback off of what he was talking about on the liability side, liability, and we're talking about property most of the time, but liability premiums went up sky high too. Obviously, there's a lot going on down here, especially in South Florida. But I think there was some relief just to add an aside and piggyback off of what he was talking about on the liability side. And to your question, we get calls all the time, not just to talk about claims, not just to talk about loss and damage. We get calls all the time about coverages and sublimits and exclusions. And the question I get a lot is how do I become more insurable, right? How do I, board presidents and their board members, how do we make the association more insurable? Because the question they're getting from their agents that are doing the job at a high level, they're going to come and paint a narrative that's great, that's better. They're going to give all the benefits of the association. They're going to give all the best parts of aspects of the association to the insurers to give them that great picture, to get them the products, to get them the policies, right? And so to do that, there's certain ways in Florida that you can actually do that. There's certain statutes or certain laws that are mandated in the state of Florida that some associations don't even know about, right? So keeping on the liability side, for instance, the scenario Danny talked about, unfortunately, in Florida, he said it. You're going to get sued as an association, as a multifamily owner operator, anyone that deals with a lot of people in the same place. If someone comes on your property and commits a crime or gets into a fight or does something on your property that they shouldn't be doing, and they hurt themselves or they hurt somebody else or whatever, most of the time the owner operator of the association is going to get sued. There's action that's going to be taken against them, right? The legislature dealt with some of this stuff in the past session, actually in 2023, and then followed up here in 2024. But in 2023, one of the things that came about was the tort reform bill. Danny mentioned it earlier on in the conversation. The tort reform bill was pretty robust, but one of the things I think is really important in the middle of all that is what's called a presumption against liability. So a presumption against liability is a legal mountain to have to climb if you're a claimant. If you're someone at an association, for instance, that's not supposed to be there, you're a third party, you're a bad actor, you're there, you go onto the property, right? Not an employee, not a tenant, not a unit owner, but you go on the property and you commit a crime, for instance, right? You assault somebody, you break into you break into a storage unit, you break into someone's unit, you break into the management office, whatever. If you get hurt, like Danny was describing before, if you get hurt in the midst of all that, today, again, you are able to sue or take action against the owner operator or the association. The presumption against liability completely eliminates that, right? So now you have a legal mountain to climb. If you want to make a claim against an association or a multifamily owner or operator that has this presumption against liability, you almost are cut off at the knees. I mean, you cannot. They are presumed by the law in the state of Florida to not have liability when this happens. The way they do that is they get in compliance with the statute now. So the statute came out last year, or the bill, I should say, came out last year. It was signed into law. It's now statute. It's in the negligence chapter of the tort statute in the state of Florida, and it's 768.0607. And again, we are helping our associations do that today. So it's a designation you have to get by the state's attorney's office here in Florida. I had to take a 65-hour class. I have the designation now to provide these assessments at association properties, at multifamily properties, to give them this presumption against liability. Once they earn that, we're helping them turn around and call their agents, right? Call their representatives and say, hey, we got to present this to the insurers, right? Our liability policy should consider the fact that we have a presumption in the eyes of the state of Florida. We have a presumption against any liability should a bad actor or someone or anyone come on the property to commit a crime or anything like that, or hurt themselves on the property in that act. Again, huge mountain to climb. You look way more insurable to a carrier, and Danny can chime in on that. You can tell me, how that might play out. But the fact of the matter is it's law, and you have to be in compliance with it by January 1st, 2025, and nobody's talking about it because it's overshadowed by BDAs, it's overshadowed by the milestones recertification, it's overshadowed by all the SIRS, right? All the structural integrity reserve requirements that are coming down. And so I think one of those things where I want to make sure, our team, when we're speaking with our clients and they have questions for us, that we're educated and we give them the resources and the answers for those questions. And this is one of those things where our team, our Global Pro, can help associations and multifamily owner operators earn a presumption against liability, which in turn should right away make them more insurable, get them in compliance with the law, with the statute in the state of Florida, and then also protect them if some of this stuff were to happen. So again, I don't know if Dan, if you've been talking to your clients about that just yet. It went into effect in March 1st, 2023. All the language in the policies on the general liability, surplus excess, and the crime policy, if you have one, reflects this new statute. And the insurers are not going to tell you this. They're not going to go on a campaign and tell their clients, their insureds, that, hey, if you do this, you're more insurable, right? Because they have to consider it. They have to consider it at that point, right? It's part of the package. It's part of the insurability of the property. Our team can help associations, and I say multifamily because that's the statute. That's in the that's the chapter of the negligence of the tort statute. Excuse me, that's in there. It takes a couple days to do the assessment and get the report and do all that stuff, but it's totally worth it, right? It's totally worth it in my opinion, and it's overlooked right now. But we are on a campaign. We're out telling our insureds, we're out telling our clients to work on this and get it done and budget for it and get on the calendar, because it's coming fast, January 1st, and there's not a lot of people in the state of Florida that are designated that can do this and provide this presumption against liability. So that's one way to help the associations, ways that Danny, other agents, and Global Pro can work together to do that for Affinity and other property management companies.
That's why I love doing these webinars. The takeaways, the golden nuggets. You and I, Matt, have been talking about this for some time, and the impacts that it will have. And I think it segues perfectly into the importance of, number one, having the right partners by your side, working with the right organizations that can keep you up to speed with what's going on. I know I can speak from a community association management perspective. There's no way we can keep up, even with all the webinars and everything that we do. There's so much that goes on. So we rely heavily on partners like Danny and yourself to keep us informed. And also that's the way we do our part to give back to the community of sharing this information, because it is important. It's important, number one, because when you find yourself in that situation, it becomes very difficult, and then you start questioning, why didn't I know this before? And this is really why Affinity puts on these webinars. So I'm real happy that you brought that up. Now, and that's a perfect segue for the next question I have here for you, Danny, which is, what are some of the actionable steps that associations can take to try to reduce that liability, similar to what Matt was saying? You hire Global Pro to really take care of that I forgot the name, but the presumption of, what was it, Matt, again?
It's an assessment. We call it
Assessment,
an
yes.
assessment of the property. Yep.
Yeah. And what other actionable steps can an association take to, in preparation for the marketing? I know that's what the insurance agents call to get the quote. What can they do to try to either reduce the premium or look a little bit more competitive when they're going to these underwriters?
Well, that's the key. You just mentioned it right there. I think what our job is, we need to paint a pretty picture of the association. These underwriters are getting submissions, hundreds by every month. And with a hard market, what happens is that, these submissions come in, all the agents are shopping around because they know the market is tough. So these underwriters are getting inundated. I talk to them every day, and they just have so much coming in. There's not enough time for them to get through them. So what happens is, if you come in with a better submission, more information, maybe the report that Matt can provide for you. If you're an older condo, you got to have your 40 or 50-year recertification done. You have to have any wind mitigation documents done. I go out and take pictures myself of the property, that are updated. The appraisals obviously will have a lot of information. So the more information I have, the easier it is to get you in front of the insurance companies that are going to be quoting your building. So what I see a lot of times is that a lot of these associations do not have all that information. And what I would recommend is for them, and I know this happens a lot in your industry, Ralph, that, you switch management companies, just like you switch providers or any kind of vendor, and the management company taking over, when they come to me and say, we need help on the insurance for this building, the information is not there. And I think as a board member, what I would do is especially for the insurance side, is to have a folder, an insurance folder, just with all that information that has been done, for the association to try to help you and paint a prettier picture, because we want your submission to be at the top, with these underwriters, and not at the bottom. And many agents will just submit the applications and say, here, please quote this. We don't do that. Anybody can provide a quote, right? Any agent, but it's really telling the story of the association. Just to give you a quick example, I mean, we have association that in Brickell that hasn't completed their 50-year recertification yet, and they finally started to do that. I went out there, I took pictures of the process of what's going on. I updated the insurance companies, letting them know exactly when it's going to be finished. When, you know, all this information is key, because a lot of times what they'll do is if they get a submission without that information, they're going to just decline. And once you get a declination, you can't go back and say, okay, you know, please help me here and try to requote this. So any kind of things that you can do, like Matt said, getting them out there to do a pre-inspection or a presumption of liability, I think it's great, because that's something that most associations will not have, you know, when we go out to market. So it's very helpful on my end.
Yeah, very. I mean, I have several of my managers of my amazing team members on the webinar, and they'll tell you that we're on it when it comes to having these policies in hand, because it is very difficult when you don't have that information in hand to be able to deliver to an agent or to an adjuster when it's needed. So I think that that's an important point, because we did run that poll a little bit earlier. And I think it was less than 30% of the camps on the call. I know it wasn't my camps. They didn't have digital copies of the policies. So if you don't have it, you jumped on the right webinar. Make sure you try to get that within the next week. If your agent is not providing it for you, then you have other questions that need to be asked. But I do want to address a couple of questions that have been, some of the listeners have been patient. Dominic and Mosuf ask that they've seen a significant increase in the difference and condition policies, and they're asking, are they really needed, or do you have to have them if you have citizens?
I can answer that real quick, and Matt, maybe you can chime in. I mean, so we hadn't seen difference in conditions policies for many years. Like I mentioned, in 2004, we had 4 storms that hit Florida, and the same thing happened back then that's happening now. A lot of markets pulled out, rates went up, everybody went into citizens. So the problem with citizens is that they're a basic policy, okay? You have basic, broad, and special forms. The basic policy is a named peril policy. It only covers you for, 10 or 11 things, and that's it. So a special policy is a little bit more, is broader. So what happens there is that, they'll cover you for anything that can happen to the building except what's excluded. So it's a little broader because they don't mention just these things. And I believe in basic, you have no theft coverage on there as well. The issue, also, the other part is the ACV, so actual cash value as well. It brings it up to replacement value, the DIC policy. The problem now what we're seeing with DIC is there's only 2 or 3 companies providing DIC policies that I've seen competitively in the marketplace right now. And a lot of them are capping it at 25 million. So if you want more coverage, like let's say you have a $70 million condo, which we're working on one now in Plantation, they have to get a 25 million DIC policy and then build that up as well, which makes it harder. These policies used to be very inexpensive, but they've gotten to be very expensive. And the problem you're going to see is that the unit owners, when they go sell a unit, and the certificate of insurance goes to the bank for the association, and it shows basic perils instead of special form, replacement cost, you're going to have an issue with those lenders. Maybe some of them it will go through, I don't know. But the bigger lenders, the national ones that we see, that they want to see that DIC policy in place. And unfortunately, like I said, they used to be a little bit less expensive, but the rates, for example, on the $70 million condo I'm working on now, they have 5 buildings, 1978 year built, and the DIC policy just for the 25 million is about $88,000 a year.
Wow.
And that's the least expensive one we found. So these policies for something like this used to be 23,000 maybe, so it's a big difference. But that's the issue you're going to have if you don't have that DIC policy. If you're with citizens, is some unit owners might not be able to close on their condos if somebody's buying or selling their unit.
Yeah, I mean, we did a webinar recently on condo terminations, and I think we're overdue for another one on it, because it's unfortunate, but the story is just becoming realer and realer of just these costs are so high that many of these associations just can't sustain it, because you have many residents that are on fixed incomes, and it's becoming very difficult. I do have a question. I want to keep it here with you, Danny, because David asked, are there other insurers out there other than Citizens?
So that is it depends question, because for example, we just recently did a building in Homestead, and we quoted Citizens, and Citizens was actually $100,000 more than the private market. So Citizens isn't always the answer. They're really a 50-50 shot. It depends on the building. It depends on the year built. It depends how close you are to the water, the construction of the building. So it's one of those things that we have to, go out to market and just see what's out there. Now, we recently also worked on a building in Orlando. The rates are a little bit lower over there, and Citizens was actually lower than the private market, by like 20,000 or so. But when we had to go out and get the DIC policy to match what the private market was, it was the same. So the association up there decided to stay with the private market instead of Citizens, because the coverage was just better. But there are other markets right now. We are seeing, again, it's opening up a little bit. It's just one of those things that we have to market it to every single wholesale broker that we work with to see who comes up with the best quote and to see if we can compete with Citizens. But I have seen it done recently that we are able to compete with Citizens. Just don't know how long that'll last. But Citizens is definitely not the lowest cost provider out there, right now.
Yeah.
It depends.
So thank you on that, Matt, Danny. So Matt, I know, you've dealt with many different insurance companies. I know sometimes as associations, we're at the point where sometimes we don't have a choice of who to go with. But I guess from your experience, what's been the difference maybe with dealing with Citizens or dealing with another provider when the unfortunate circumstance does occur where you have a claim, and where you're having to say, hey, I've been paying for this policy for X amount of years and we had a major loss. What does it look like? And what are your recommendations of what managers and board members should do?
So that's a loaded question, but
Yeah.
So I think it comes down to Danny's, he's on the agency side, so he's talking about the premiums and sublimits and exclusions and I think at the end of the day, I have a different view, right? I'm kind of premium agnostic. I'm worried about the coverages and how you're going to recover if something were to happen. So, but putting us together is like both sides of the coin, because we're both serving the same client, but in the same manner. And so again, just answering your question, the toughest thing is to just focus on the premiums, and that's all that everybody asks their agents, right? Like, what's the premium? They don't think about the other things, even though the agent is in the weeds thinking about everything, every part of that package policy, right? And so when we get called, typically it's when something bad happens, and we have to figure out, okay, what's afforded here, right? What does their premium get them? And oftentimes, unfortunately, Danny made a comment about Citizens being more expensive than other policies, but this has nothing to do with that comment. It's more about, I've seen policies that are more expensive that have so much more robust coverage that it's not apples to apples, and it's actually better to pay the higher premium, but you don't win board seats by paying more premiums for your insurance policies, right? So
That's right.
and that's when the politics comes into play. I to kind of answer that holistically, there's so many variables, so many factors that it's hard to just talk about that. I mean, so I have policies that have middle of the road premiums that have great coverage. They have great, a great adjusting process built in, that typically when I see those policies, I go, yeah, please sign them up right away, because we can get through the adjustment process. We know the insured is gonna get paid as long as we do everything properly. They can turn around, sell it to their supervisors, sell it to their their folks internally to get this paid. And then we have the other spectrum where I know, man, this is going to be a fight. These guys, I know that from experience. I know when it's this type of loss, what they're going to do, what they're going to say, what their defense is going to be, and how they go through the process. I think the one thing that is unfortunate today, that we're constantly seeing, no matter which insurer right now, the ones that are really, really, really defending themselves typically follow the same path. And I'm talking about the adjustment process here a little bit to answer your question fully, but maybe it's a testament to Global Pro, maybe it's the way we do things here. But when we get claims, typically, and these are association claims, I'm talking to coverage counsel right away. The adjustment of the claim with the adjuster, the IA, or anybody else, the examiner, or anybody that would be on the adjustment side, goes really fast, and I get coverage counsel right away. Now, for me, that's not in good faith. The insurer shouldn't be doing that right away. The insurers are not trying to sue their carrier right away. They're not posturing like they're going to sue anybody. We're not going through that whole process. But to me, and I would describe it this way, there's this adjustment. They've implemented this standard of adjustment where they're going to say, look, if we can find a way to defend ourselves, and they have representation, unfortunately, right? This is what happens here. We're going to make sure that we get this right to coverage counsel and then let them deal with it and move on. That's not in good faith, unfortunately. That's not how the process is supposed to go. But we're getting that more often today. So the reason why I'm saying that to you guys is because oftentimes you might have a great insurer with a great product, and you have a human on the other side that decides, no, you know what, we're going to defend ourselves here, and we're going to get coverage counsel involved right away. And when I say right away, I'm talking about we get out there for the inspection, which usually happens in the first week or two, and 2 weeks after that. So maybe a month in, before they've made an advance payment or any undisputed, before we've gotten estimates, they decided that, here's the reserve, and we're going to get coverage counsel involved right away. And that's who I'm talking to now, unfortunately. So my point is, it's not just the premium. It's the sublimits. It's how they treat you when there is loss or damage. It's how they get through that adjustment process, right? There's all these factors in between Affinity and all the cams on site and the agents. You guys have a tough job right now with specifically to insurance and everything that's going on. So, you know me, I'll talk all day. If you ask me a question, I'm going to answer 5 of them. But the point is, I'm sure Danny gets the question too. Which one's the best insurer? I don't know. I don't know. They're all businesses, and I look at them as businesses, and they have balance sheets and they have P&Ls, and then they internally work however they work, like every other company and every other industry that's competing in the same place. Are there good insurers? Yes. Can I name a couple of them? Yeah, AIG, Chubb. I think Danny would probably agree with most of these. I'll leave the ones I don't like out of the discussion right now because. There's reasons why, and actively there's reasons why that I'm not going to name them. But again, the premium discussion is just such a small component of this whole thing. It's a matter of will you get paid if there's loss and damage? How much is your premium actually affording for you in terms of coverage for the association and the policyholder? And then again, is there another option out there? Options are slim to none. Right now, so it's very concentrated, and again, Danny, maybe you know more about this, but I'm already hearing that some of the typical carriers that you'd see in Florida for the associations that we represent are starting to make balance sheet decisions today because the values have gotten so high, and so they're getting out of certain brackets of value. Meaning, if you have a $200 million building, I know several insurers that are leaving that market for right now because they just have too much risk on their books. And so that's another thing that we haven't seen just yet that I think by the end of this year is going to flesh itself out. Unfortunately, cost of capital is so high. These associations are all getting their appraisals last year, this year. And again, I think that they're de-risking a little bit here on top of that. So we need more carriers on the other side of that. We need more carriers to come to the market, and admit it or not, that's what we need right now. So
yeah, what we need is a couple more years of no storms so that they could come back into the market. Because unfortunately, if we do get hit, that's where the challenge will lie. So I actually have a question here from one of our attendees that asked a question, which Danny, we were talking about this offline, you and I yesterday, which have to do with roofs. So many associations, there's been many innovative products that have come out. For our industries, right, a roof is a very critical component. I'm sure that both of you would agree with me. So there's been innovative products that have come out for years. I mean, not just now, but they continue to come out. And I guess maybe if you could tell the listeners, I know we were talking about silicone coating and the difference between replacement and how the insurance companies take it. We have an anonymous here question from someone that says, with regards to foam, what have you seen? Like, how does the insurance company look at these things? Do they underwrite it as a new roof, or how do they look at it?
Yeah, so I get this question with the silicone roof coating maybe twice a month or so from buildings, not only associations, but warehouse buildings and everything that we also insure, coming out and saying, what will this help me with my insurance, right? If I do a silicone coating, 10-year warranty, that kind of stuff, it's a third of the cost of replacing the entire roof. And frankly, the marketing answer for this is a simple no. It will not really help. Not even citizens would accept that. So I took a citizens course specifically about roofs a year or two ago, and they showed pictures side by side of a condo association on the water that did a silicone roof coating, looked beautiful after it was finished, and then they showed it every year for 3 years after that. And you can totally see the difference and the deterioration. And again, it depends on the roofer as well, right? Who's doing the work. But because of that, they made a decision not to accept any sort of roof coating on the roofs. And every single insurance company besides Citizens is really taking the same stance as far as so if I have a roof that's, and I see these all the time, 25 years old, and they want to do a silicone coating roofing, I just tell them not to waste their money because, and again, if you have a concrete roof, you're not really replacing the concrete. It's really the layers that are on top of the roof that you have to peel, the concrete roof you have to peel off and replace. That's called a re-roof. But just putting a silicone coating on top to waterproof the roof, yeah, it may help you with leaks and you'll have it for a couple of years. But as far as the insurance companies go, a lot of them will decline the business. They'll say, well, you have a 25-year-old roof. We're not gonna even look at your building. So I stress the fact that, you need to save up for the roof. I live in an association as well, and we've saved up. We're about to replace our roofs. It's getting to that point. So you have to really make the reserves to replace the roof. Once you start getting to 20 years old, half of the insurance companies drop off. So what happens then? You have less companies to go to, your price is going to go up. So that's the issue we're seeing now with those. So I really would not recommend to do that. I don't know about the claim side, if you've seen, Matt, on your side, roofs with the silicone coating and if there's losses to that. But as far as the insurance companies go, they will not consider that a re-roof, and they would ask for proof of, if you have that. They're being very, underwriters right now are asking for everything. They want to know your DNA, your blood type. I mean, in order for them, especially after Surfside, what happened there, I've had insurance companies ask for board meeting minutes, to see what's going on with the board.
Interesting.
So it's very, they're really underwriting. This was not the case before, but the underwriting part has gotten really hard, and I think that with the silicone type roofs, you're not going to get very far with some companies.
Interesting. Well, thanks for putting that in, because I know we've been talking about that. I know we had that discussion with one of our associations with you as well. So we're being proactive and having that conversation first before making a big decision. I have another question here for you, Danny, from David Harris, and he asked, they have a 20-year-old building, just did approximately about a $6 million renovations, never had a claim, right on the Atlantic. They have a solid building, but they're told that Citizens was their only choice. What are your thoughts? I'm sure that's difficult to go straight to it, but
I mean, I have so much more questions, right?
Yeah.
Besides that, what kind of construction is it? Because that really will.
So it sounds like they should contact you directly.
Yeah, I mean, I would have to really look at more information on that and see if we can help. Again, I don't really think Citizens would be your only option. I just think, maybe the agent meant it was your most affordable option. But we are, like I said, we are seeing the market change a little bit. It is harder if you're closer to the water, but I've seen it. I've seen in the last quarter that the rates have gone down. There's some companies that are taking buildings out of Citizens. It's rare. It's not, like it's happening every month, but we are seeing that. So I would have to get more info to try to help out that.
Excellent. So there's one thing I do want to mention before we wrap up here, and I give you each an opportunity to provide, a little golden nugget and then how they can reach you. And by the way, we've had some people ask how they can reach Matt, how they can reach Danny, or how they can reach Affinity Management. We'll go ahead and send an email right after the webinar with the actual video of our YouTube channel. So we'll make sure to share everyone's contact information if Matt or Danny haven't done so already. But I do think it's important for us to look at the positive light of things as well. And it's important to understand, we try to coach our board members all the time in expressing, look, we are going through a difficult moment. It's going to be difficult for the next year or two, or possibly maybe 3. But once we get through this, there is a shining light. And the way I see it is, many of these buildings are finally going to have the reserves that they've needed. They're going to have the safety components, whether you dealt with the fire, the BDA, or the elevators. You're going to be have the money necessary for the structure. And I'm not an economist in any way, but there will be a downturn to this market. This market cannot continue going the way it's going. So that means that appraisal values will need to come down. Now, it depends on your leadership skills and how you manage this situation, because it doesn't mean automatically give the residents, yes, we want to give them a bit of relief. But the way I see it is that we should look at it as, okay, how can I position my building now moving forward so that I can increase and continue to enhance its values and enhance the experience for the residents? So right now, I think the focus for management companies, for managers, for board members is just to communicate. None of this is our fault, your fault, or the vendor's fault. It's just the situation that we're in. It's challenging times, but from these challenging times, a lot of opportunities always open up. So with that said, I think that was going to be my golden nugget. I'll go ahead and hand it off over to Danny. Any closing remarks or any last minute recommendations for the board and how they can simply reach you?
Yes, I mean, I don't know if you'll be able to send the contact information
Yes, I
after, and I was trying to do it on the chat there, but I think I can only do it for certain people. No, just basically, when you go out to, and you have your property manager look into, getting coverage for a building for your association, I would only recommend, you working with the incumbent agent and maybe one other agent. I've gone to situations where there's 3 or 4 agents already been reached out to by the association, and I just simply walk away. I mean, we all represent most of the same markets, so we go through wholesale brokers to reach those markets. So the way the insurance works is on a first come, first served basis. So if your incumbent agent sent out the application, then you have another agent send out the applications to all these markets, you're doing yourself a disservice because you're going to be blocked. And this agent might have 2 or 3 companies the other agent needs to build the portfolio up together when you have to layer the coverages. So I really, you really are doing the service. And then the underwriter gets, 3 or 4 different submissions from different agents. They're going to just say, oh, this association just wants, shop around, they're cheaper. So they really kind of don't put that up to the top of their priority. So just work with 1 or 2 agents should cover the entire market for you based on the insurance companies that are here. That's one recommendation I would give out.
Yeah, that's a great one, Danny. I know we come across that a lot, especially with newer clients that are onboarding to Affinity. And at the end of the day, really, what you guys are is that service, like really being proactive with the manager or with the board, depending where your relationship lies. But yeah, you're right. We've come across that so many times. What an association should be looking for is someone that's, there to service the account and provide the best options. So thank you again, Danny, for being on. It's been a pleasure. Matt, any closing remarks and how they can reach you? You're on mute, Matt.
I was with the technician here, but
I'm gonna get you that new button that's red with green.
I need the big one in front of me. Yes,
The big one, yeah.
So let me start over. Thank you very much for having me, guys, especially with you two. Obviously, I hold you guys in very, very high regard, and I appreciate these as well. You mentioned before how these are very, very important because I always try to take away something. I always try to learn something from these webinars and the discussions that we have. And I learned a lot today, especially about the market and things like that, obviously. So this was great. I think that there's 2 nuggets I want to leave everybody with. First is something that Rafael mentioned earlier that I think I'm like a broken record. I say it every time I speak in front of anybody, in our industry, right? And that is, and Danny can help you out if you're his client as well, but when you have a renewal or you have, you're in the policy period at the moment, one of the easiest things to do every year is to ask for a certified copy of the policy, right? By law, your insurer should provide you one every single year. When you get the renewal done, it takes, and correct me if I'm wrong, Danny, it takes about 45, sometimes 50 days to get everything kind of wrapped up and to actually have the policy. But the best time to do it, to make that request is on renewal. Just say, hey, when the policy is ready, I need a certified copy. Please send it to me. If you're an on-site CAM, if you're on the board, if you're a member of the association, that's something that should be done every year in general, right? You should always have a certified copy for many reasons. Our perspective, though, is always that one of the hardest things to do is after loss or damage, especially if it's a hurricane or a Cat 5, a major catastrophe. One of the hardest things to do is call your agent or the carrier and ask for a policy because they're in the same position you're in. So it's going to be very, very hard to get the information you need at that moment. Might as well just get it now and get it over with and have it on, on file. Affinity certainly does that for their associations, and you know, I think it's important. Something that simple should be easy to do every year. Second thing is, again, going back to what Danny talked about, presenting the association, presenting the insurability of your association, your home, or whatever, to the insurer is so important right now. He mentioned that they're asking for crazy, you know, things like meeting minutes. I mean, I can't tell you the stuff that we are asked for when loss or damage occurs. The fact that they're asking for it in the underwriting makes me a little bit more at ease, because half the time they ask for stuff after a loss, that they never ask for an underwriting, and it's frankly it's frustrating, because that's not allowed, right? That's illegal in the state of Florida and in most other states. But again, getting away from that whole discussion, you know, I think one of the things you can do, again, call us, email us. Our contact information will be here, provided to everybody. We can help the associations today with their liability policies. I mentioned the statute before that you need to be in compliance with. A owner-operator of a multifamily residential property, which includes associations, needs to be in compliance with this statute by January 1st, 2025. You can earn a presumption against liability, again, which is a huge legal mountain to have to climb. If anybody that shouldn't be on your property wants to commit a crime or do anything bad at your property and then take action against the association for however they feel damaged or hurt or whatever. You know, again, that's one little way, but it can be done. It needs to be budgeted, and we need to perform the assessment and give you guys the stamped report, you know, helping you earn this presumption against liability. So I try to change my name. I usually put it over there in the name, but I can't do it here. But anyone can email me. It's really easy, mms@globalpro.com. Really easy. Or call 855-487-7475. That's our main line. Ask for Farah or Yen. One of them will answer the phone, and they'll get you right to me. Again, mms@globalpro.com or 855-487-7475. And thank you guys again. This was awesome. I really appreciate the time and the opportunity to speak with you guys. Okay.
Thank you, Matt, so much for being on. Always a pleasure to have you on. I know we've been doing this already for several years now, and we look forward to continuing our partnership that we have. So to the board members, managers, and CAMs, really, as I stated earlier, just really want to thank you for taking the time to gain some additional knowledge. It goes to speak to the leadership skills that you have, the ability, your fiduciary of doing what's right for your community and your residents. As I stated earlier, it's important for us to keep top of mind that while we're going through these very difficult situations, there's always going to be an opportunity for us to be able to provide a better service for our residents by getting this education. So if you want to reach us again, and you don't have a vision for your community, you don't know what your 1 to 3 year goals are, please reach out to us at managedbyaffinity.com. Our business development team would be more than happy to have a conversation with you and see if we could be of service. Thank you again for attending today's webinar. We will have it on our YouTube page, managedbyaffinity.com. If you haven't subscribed, make sure you do so, as we'll have our webinars always up, and we'll see you in our next webinar. Thank you, everyone.
Thank you.
Wonderful. Thanks.
Okay.